Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by MarketFi. I'm your co-host, Joel Elconin, along with Brianna Valesky, and we have Phil Davis on the line. He is the founder of Phil's Stock World. Phil, how you doing today?
I'm great. Thanks for having me on.
All right. Glad to have you on here. Was looking at your site here, and I noticed that your lead article was inside the brain of an investing genius, and you have a picture of Peter Lynch up there. Just tell us what you like about his investing style, and is it still relevant in today's markets?
Well, I mean, it's relevant to me. I mean, we're generally value investors. I mean, Phil Stockler, we're known for being option traders, but we use options for hedging and for leverage. We don't use it we're not option technicians. We're more value investors who use options to leverage our positions better. So, it's very much in line with our philosophy, which is we prefer to buy good stocks cheaply rather than just chase all the momentum stocks that are unfortunately, what's popular in the market right now.
How do you determine what stocks are good, and how do you determine if they're cheap?
Well, the very boring old-fashioned way, we actually look into the companies, we investigate them, we look at their debt, we look at their cash flow ratios, we look at their price-to-sales ratios. We look at the entire market and where their niche is in the market and how they're growing it or where it's shrinking. We look at the overseas competition, if there is any. And it's something that's sort of a dead art almost, and it gives a huge advantage to people like Lynch. I mean, this is why Lynch is able to have such fantastic returns, and Buffett too in Berkshire. People go chasing these Netflix and Tesla and all that, and it all sounds very, very exciting. But over the long haul, you can make fantastic money just buying GE when it's cheap, and just holding on to that and playing it year after year after year. You don't get those exciting, 1-year gains, but it's very exciting over time, and your whole portfolio consistently makes 15 to 20% per year.
Well, stock like GE, I guess you have to be pretty good with the market timing and the use of options. Does have the nice dividend, but hasn't had the greatest capital appreciation, over the run of this bull market.
Well, that depends how you play it. Now, you see, that's the interesting thing about these kind of stocks. Because if you look at GE, for example, GE was at $21 in 2013 and is now at $26. And that's actually a very nice gain. It's a $5 gain. It's over 20% gain in less than 2 years. You can enhance that, and this is what we always teach people. You can enhance that by selling calls against it, which is like paying yourself a dividend. And you can pick up an extra 10% doing that every single year. And also, when I give a webinar, like we always do live webinars on Tuesday, and one of the examples I often give to people is I talk about a stock. I say, look, it's like buying a pair of Levi's. You don't buy and hold forever, but you know what the right price is. Like, a pair of Levi's is worth like $50, so it costs $50 retail. You don't buy it for $50 because you probably have 3 in your closet. But if it's $40, you might say, you know what, I might buy one because it's on sale. And if it's $25, you absolutely buy it because you know that's a fantastic price. And if somebody offers you $60 for a pair, you're going to sell it to them because you know that's too much. Well, we try to make stocks like that. We say, look, there's a real price that this stock has a value at, and when it's too cheap, we buy it, and when it's too expensive, we sell it. It's a modification of buy and hold. It's an intelligent way to play buy and hold where we're willing to let go of good stocks if they get too expensive. Let somebody else take it for a while, and we'll find another cheap stock.
Great analogy there. So once you determine the company, then what do? Do you go to the charts to pick a time period? What kind of technical analysis techniques do you use to pinpoint your entry after you determine what stock you want to buy?
Well, I don't want to make any enemies in your audience, but we really don't like TA very much.
That's okay.
Yeah. TA to me is very good. It's very good at telling you what already happened, but it's terrible at telling you what will happen. The only reason we pay any attention to TA at all is because so many people do that it becomes a self-fulfilling prophecy. They look at these lines on the chart, like the 200-day moving average, the 50-day moving average, and people will, there are programs that are designed to hit those lines and start selling and start buying depending on what the people's opinion are. That then confirms the lines to everybody else who's watching them. It's not a real thing, though. It doesn't tell you anything about the function of the company at the time. It doesn't tell you why something went up or something went down. I mean, if you look at Tesla, they've got, not Tesla, I'm sorry, Lumber Liquidators. I was going to say, I don't know why I said Tesla. I guess if you look at Lumber Liquidators, they've got a chart that is from hell, and you would have to be insane to buy it. But we're buying it because the
How
technicals
come? Why
don't
are
tell
you
the
buying?
story.
Why are you buying Lumber Liquidators with all this overhang going on in the 60 minutes? I happen to be in the same camp with you, but give us your reasons for buying it.
Okay, well, in the simplest logic, I mean, look, they've got a problem because some of the wood that they imported from China had more formaldehyde than should be in the wood. All wood has formaldehyde. It's like how many insect parts are in your peanut butter, right? It's okay if there's 40, but if there's 400, that's too many. It's not. You don't like to think about it, but it's just something that's there. The same thing goes for Lumber Liquidators. In this case, there is a certain amount of formaldehyde that can be in wood. You can't possibly not have it. Too much, though, there's a limit. Each state has a different limit. California's limit is much lower than the rest of the country. So in California, some of the wood that they import from China had more formaldehyde than California allowed. And again, that even depends on what the test is that you perform on it. Some tests say no, some tests say yes. So this piece, and by the way, this piece was brought to 60 Minutes by people who were shorting the stock, and brought to their attention by, this whole matter was brought to their attention by short sellers who were short on Lumber Liquidators and wanted to create a story out of this thing. And it's brilliant. It was a brilliant strategy. I wish I had thought of it, because it's a great way to kill a company. But at the time, the stock was trading at $69 a share. Now it's trading at $12 a share. But if you think about it logically, this wood is only 10% of the wood that's sold by Lumber Liquidators, and California is only 20% of their total market in the United States. So if you take 10% of 20%, that comes out to 2% of their total sales are affected. Even if they had to go to every single one of those homes and redo the entire floor, take out the floor that's there and put in new floors and go through all the work again, it would only be 2% of their sales.
Where did you start stepping in this thing? Because I managed to stay away from it until after that last earnings flush, and built the base. It's actually back up at $15 here. I mean, you could get hurt. I mean, there was a drop. I mean, there was a lot of different drops in here, a lot of different consolidation phases going to. I guess it's kind of distorted here on the monthly. When did you start dipping your toe in it? And are you using options? You had talked about using options to to enhance your gains on this. Where did you step in, and how are you using options to maximize the profit on your position?
That is a really good question. We do something that's called scaling into a position. You might think of it as dollar cost averaging, but with options, it's a little bit different. For example, we began buying Lumber Liquidators at 25 on that first initial drop. Right about the bottom was $27, $28 when it first dropped. We picked up a little bit there, very little, because we didn't know where the bottom was going to be. Now, when I say we picked it up, what we do when we buy it is we sell the 2017 $25 puts. And I don't know if you guys talk about options.
Yeah, we
on the
do.
show.
What did you get for those?
We got. I can tell you exactly in a second. I think it was $6. I'm going to confirm that though while I'm talking to you. So we sell the puts, which obligates us to buy the stock for $25 in 2017, and we sold those puts for exactly. Oh, look at that, $6.70.
Nice.
That's pretty good.
Nice.
That was on April 29th. Was our first position.
Okay, and then all right. I don't know if can't remember. So you probably just took in the premium on those, then, right? You didn't get assigned to stock yet. I believe it did drop.
No. You're not going to get assigned. There's too much premium in the stock to get assigned. So April 29th, when it first dropped was early March.
Yep.
We watched it for a while, and then on April 29th it took another dip. That's when we bought it, when it fell below 30. And we sold the 25. So the stock at the time on April 29th was about maybe $28. We sold the $25 put. So we're promising to buy the stock for another 10% down, and we collected $6.70 for that, which gives us another 20% below that price. Now, lo and behold, though, where are we now? We are even further below that price. Our net, though, was 19, and we're very, very comfortable with that net.
All right. I mean, very, very interesting strategy that Phil's talking about here. One thing you got to keep in mind, Phil, and there are risks associated with selling puts, and you have to have this is a pretty sophisticated strategy, and you have to have the proper margin in your accounts, in order to do this. But by selling the puts, you are, even if the stock sits still, you're taking in a little bit of time premium every day, and it's a great strategy. It's just not for everybody. So do you have a
No,
target?
absolutely. But what you're doing, though, is you're obligated to buy the stock
Correct.
for $25, but you get paid $6.70 up front. So you net $18.30 for the stock. That's your net entry price.
We have Nick Shaheen on Tuesdays that talks about that strategy, and he does it with actual spreads. Anything else on your buy radar here? Oh, well, first of all, do you have a target in lumber liquidators or any upside?
Obviously over 20, because we're coming in at 18.70. But by the way, let me tell you something for you guys.
Sure.
This is really important. That option people don't explain properly. When I talked about scaling in, right? So we collected 670. Let's say it was 6, okay, for the $25 puts. Those puts are now $12. So we're down 100% on the puts. But a lot of it's premium because in reality, we're netting in for less than $19. So we ignore the premium. But what we can do right now, even if we wanted to, is we could take that $12, $25 put, and we can move it to 2 times the $15 puts, which are $5.50. So we give up $1, and we'd still be netting in for $5. We'd still be netting in for $2.50 per thing, and we would actually lower our basis from 18 to $12.50, but we'd be promising to buy twice as many. And that's what we do when we scale in. Plus, we can move to 2018 when those call puts come out and pick up some more cash as well. So we can keep lowering our basis if the stock doesn't respond. And already $12.50, we're in the money. $12.50, we're already in the money on that sort of thing.
Yeah, is there anything else out there on your radar besides the lumber liquidators?
Well, we posted it, and we were just going over this morning, in fact, in our new post that we were talking about a trade we took on Greece. GREK is the ETF for Greece. And Germany just this morning voted to do the third bailout for Greece, which means the rest of Europe is probably going to follow suit. That's going to shoot that ETF, GREK, is currently $10.05. We expect it to go to $11 in very short order. So there's 10% to be made there. The options trade I laid out is a spread of the September $9 and $11 bull call spread, and that trade can make about 50 or 60% in 30 days.
Okay.
So we like those are the kind of trades we like to take advantage of when there's news and a good reason to get involved in something. That Greek ETF has been killed, and it should turn around.
Do you short stocks, Phil?
We do, and if you want to short something, I would short Netflix.
Okay, all right. I've been saying that a lot, too, and I have nothing to show for it. Why are you shorting Netflix?
Why are we shorting Netflix? Because Netflix has a PE of 300. It's trading at 300 times earnings, and their plan is to become Time Warner. Their plan is to become HBO, to produce their own shows and have their own network and so on and so forth, right? Time Warner trades at a PE of 13.
So
and they've been, and Time Warner has 100. Time Warner is already international. Everything Netflix dreams about, Time Warner's been doing for 20, 30 years. Time Warner is in 150 countries. Time Warner has 200 million subscribers. Time Warner has their own production studios, their own shows, so on and so forth in the pipeline. Plus, they have movie deals and so on and so forth. Everything Netflix says they're going to do, Time Warner already does. But the valuation of a mature company doing what Netflix plans to do is 1/20th of what Netflix is currently valued at.
All right, how about that? I mean, first of all, how you playing it? Do you buy puts? Do you write calls? How you playing it?
We actually sold calls, which is very risky. But when you hit $130 on Netflix, you actually are at a 300 times multiple to their earnings. And we think we're putting our foot down at $130 and saying, no, this line shall not cross.
Okay.
And that is a dangerous play, though. I do not recommend this for anybody who doesn't have a massive portfolio. But for example, now that I said, I mean, and again, I do not recommend this for the average trader. We have a lot of high net worth people on it, that trade with us. You can sell the October $125 calls for $10.
Crazy. I know. There's crazy.
So
Yep.
so basically, as long as they stay under 130, you're going to make at least $5 on that play.
Just one thing here, and I know you said they want to be Time Warner. I think one thing that's keeping me out of the short camp here on the Netflix, at least at this point, is just the way the breakdown in the old media that you're having. I don't know. I mean, what if they can come up with like a la carte cable? And you don't have to pay for all these channels, but through Netflix, I'm a big sports guy. I can just get, ESP, all the ESPNs, ESPN Classic, Fox Sports. I mean, do you think, think that you have something like that could really
But then
hurt?
Netflix is just a channel, though. Netflix is a channel essentially. They're not they're not the guys who would be delivering that content. You're talking about what AT&T and Verizon are going to be able to provide to you.
Okay. All right. We've been on the line with Phil Davis, founder of Phil Stock World. One final question for you. Just overall, I know you play your individual stocks. Do you have any thoughts on the overall market here as we're treading water just off all-time highs?
Yes, the all-time highs are a great place to get to cash. We are at least 50% in cash. A lot of us are 75 to 80% in cash right now. We think the market is toppy. We think people are ignoring the breakdown that's going on in China and Asia. We think Japan is stressed to the limit, and the Europe is barely holding flat as far as their economy goes. And the bottom 80% of the people in this country just aren't making enough money to make up the slack. We're a consumer-driven economy, and our consumers don't have any money.
Phil Davis.
So I think we're very toppy right now, and if the Fed does start to tighten, you're going to get a pretty good backlash, probably at least a 10% correction.
Wow. Phil Davis telling it like the way it is, founder of Phil Stocks World. Good information, good trading strategies. We'll keep an eye on your calls, and we'll have you back on again soon.
All right, thanks. Great talking to you. Have a good day.